Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, April 25th, 2017. In today's video, we're going to go over earnings that are going to be reported after the bell, folks. And again, there's quite a bit. The earnings season is in full effect. One of the reasons why the markets are having a great rally today is continued great earnings. Caterpillar up 8% on the day for earnings. Alcoa's up 9% on earnings. And McDonald's up 5.5%. That is just making the Dow have a monster day, up 250 points. Now, let's look at the earnings after the bell today. Number one, Texas Instruments. What I'm going to do is I'm going to go through about 3 to 4 big earnings names after the bell, give you my bias. Overall, is it going to go up? Is it going to go down? Texas Instruments right off the bat on a technical basis here. You can clearly see the stock has rallied into earnings. That takes a little steam out of good earnings. So that means, again, the stock is kind of negatively priced. And again, notice the double top. Double top is technical resistance. Therefore, this stock has a negative bias with about a 75% chance of a downside move on earnings. And I'll give you my percentages on every trade here that we're looking at. 75% is a pretty high likelihood that it sees a pullback on earnings. And again, technically speaking, it's rallied up. It's at a double top, which again is resistance. And again, we see the money flow beginning to be pulled out, meaning that you're seeing some selling pressure come in on this stock. Next up, let's take a look at, let's see, how about Chipotle, CMG? Take a look at the chart here. Here you can see I have a former resistance line that we actually slammed into. Now, the stock has pulled back off of that level a little bit, which takes a little sting out of negative results or a miss of earnings. The stock has also rallied from this low to this high in the last 2 to 3 weeks. That's about a 90-point move on the stock. Huge move, huge move. But I think the biggest thing here is the resistance area right here. That caps the upside. I would give this a negative bias into earnings. However, because of the recent pullback, sharp pullback yesterday, the odds are only about 60-40 of downside. So there's only about a 60% chance, just a little bit more than half, that this sees downside. In the bigger scheme of things, it's still an oversold chart, even though this has had a short-term big rally. So again, I would favor the downside here slightly, but only slightly, not nearly enough for me to position myself on the short side here on CMG. Next up, let's take a look at AT&T. AT&T is an interesting one. See this trend line here? Pivot low to pivot low. It broke below that. That's a weak signal on the stock. 2-3 moving averages just above. That gives me a negative bias. And again, downside target's not huge. Looks like it's around the 38, 60 to 65 level, which is about $1.30 downside as potential on this stock. All right, now the key is here. Check this out. Based on the fact that it's been trading down, it still should have a little bit more downside on earnings. Odds of downside are about 70-30. So again, good odds, but not again. I'm looking for me to position myself in a trade. I want to see 80-20. Meaning that I can find a trade if based on PBT methodology that we teach, which we came up with here, price, pattern, and time. It's analyzing those 3 factors. When you have multiple signals, a price, a pattern, and a time factor, it will give you that 80+% chance of success. And so far, I'm not seeing that on this chart of AT&T. I do favor the downside based on the overall chart, but I don't have full-fledged PBT, which would give me that no-brainer trades opportunity. One of the last stocks I want to look at here, let's take a look at Wynn. Wynn has done very well of late. Very, very well of late here. And the reason being is revenues in Vegas are going up. They're getting a football team, which is obviously NFL team, is going to bring a lot of new revenue and not a lot of, those stadiums hold like 50, 60,000 people. So those people are going to be in Vegas. That means more gambling, more partying. Football team just gets the people out and feeling good. So that's been a positive. That's rallied the stock up. However, I do see a bearish pattern here. Look at the bearish pattern right here on Wynn. All right, sharp down move, inside bar bearish. To me, even though it's having a good up move today, I would be negative on this stock with a downside target of a retrace right here. So I would say anywhere between the 50 and the 20, and this trend line right here, right around a 105 to 107.5 target. That gives you about a $10 move or a little bit more than $10 to the downside. That's pretty cool, actually. That is actually very, very cool to see. And again, this should trade down. I would give it around 75-80% chance of downside on earnings. Again, their projections are the only thing that scare me a little because of all the optimism out there. You figure their projections for the next quarter and the next quarter out could be very bullish, and that gives you a little bit of risk there. But overall, the chart still dictates a bearish move. All right. So again, that's an interesting one. Let me see if there's anything else I want to go over. Let's see. Juniper's reporting today. These are smaller stocks, but nonetheless, let's just quickly look at it. No bias on Juniper, just sideways choppy, no action here. I do not have a bias. Maybe a little upside bias, but that's about it. Take a look at Cree. Cree's been hammered lately. Let's take a quick look at Cree. Ooh, Cree's not a great chart here, guys. Bearish consolidation into the 20 right here with the two moving averages above. This very well could trade scarily down to about $21, although, again, the odds are only about 60-40 on that since it has fallen in recent times and the market is so bullish right now. Crazy markets, guys. I will tell you, be the first one to tell you, as a guru who studied the markets for literally decades now, it's a wild market. I mean, the rally over the last 2 days has been tremendous, absolutely epic. Again, you have tariffs on Canada now coming out, and nothing scares the market. Nothing scares the market. And part of it's the earnings this morning. I mean, Caterpillar, all these earnings, Disney, not Disney. We had McDonald's earnings. I mean, to see McDonald's up 5.5%. I mean, when was the last time that happened? Caterpillar up 8%. Alcoa now, Alcoa I don't think is part of the Dow anymore, but up 9.5%. Incredible. Absolutely incredible. So that's driving. Earnings right now are driving. The question is, can they continue to drive? And that's what we're going to find out after hours. And don't forget, Twitter's tomorrow morning. Taking a look at Twitter here. Twitter, overall, is cheap, but I don't like the price action today, down a penny. That concerns me a little. Doesn't mean it can't go up because it is so oversold. I mean, look at where it was back here. Look at the downdraft. So, I mean, it's just looking for anything positive on the chart. But I personally, it does make me nervous that it's not performing better ahead of earnings tomorrow. What do some insiders know? I mean, it's 18 million shares. That's not all John Smith's selling 100 lot blocks, right, on the stock. So, again, something very interesting there. We'll have to see how it all plays out. I'm going to continue to watch. And, again, hopefully you guys will continue to watch with me. Come join us at InTheMoneyStocks.com. Let's trade this market. Let's make money. Analysis, PPT methodology. Come learn it. We'll teach it to you and profit. All right, guys, take care.